Hello folks, this is Tony Drake from Drake & Associates with an educational economic update for October 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in September. I'll also provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. We just completed the third quarter of 2018 and are now entering the year's final stretch. Between July and September, the S&P 500, Dow, and the NASDAQ all gained at least 7%. In fact, the S&P 500 had its best quarter since 2013. However, last month's performance contributed little to these strong gains. Historically, September isn't a really strong month. In the past 20 years, the S&P 500 has averaged a 0.8% loss in September. The major indices continued this trend last month, posting mixed returns. The NASDAQ was down 0.8%, the S&P 500 up 0.4%, and the Dow grew by 1.9%. This limited performance came despite both the S&P 500 and Dow hitting new records during the month. As has been the case throughout the year, trade continued to be a hot topic last month. The U.S. and China imposed more tariffs on each other's imports. However, Mexico and Canada agreed to a new trade accord that replaced NAFTA. These geopolitical developments generated major headlines, but they weren't the main drivers for the recent stock performance. Instead, investors really focused on the fundamentals. September's news gave us a lot to think about, from housing to retail and more. Recent data indicates the housing market may be slowing. As prices increase and inventories stay low, many buyers can no longer afford to purchase homes. The challenge is especially acute in large cities, which could drive some people to relocate. Reports also indicate that retail sales remain relatively flat. However, the pace may pick up again. Tax cuts and a strong labor market mean consumers have more money to spend. In fact, consumers are feeling very good about the economy. The final result for September's Consumer Sentiment Index was above 100, only the third time ever. In addition, consumers' expectations for their personal finances to improve reached the highest level since 2004. Against this backdrop, Federal Reserve Chairman Jerome Powell said the economy is strong. He noted that inflation is close to the Fed's 2% goal, and the labor market is providing the jobs that people need. Going into October, we have a lot to keep an eye on. From Italy's financial concerns to the upcoming corporate earnings season, both domestic and global data will be on our radar. Just as stocks often drop in September, October can bring volatility, and the fourth quarter is often strong. Of course, past performance is no promise of future results, so our goal will be to analyze current circumstances and find opportunities for our clients to position themselves for the future. That's it for this month's Educational Economic Update. You can always visit us at wealthwisconsin.com to learn about our upcoming workshops. And be sure to listen to our show, Retirement Ready Show, on AM 620 WTMJ, Saturdays at 1 p.m. Once again, this is Tony Drake from Drake & Associates signing off for the month of October 2018. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We'd be happy to talk to you. Thanks.